Hey, Kyle, very good to see you. Today, we are talking about 4 rules for investing after retirement. As you know, retirees have so much to balance, right? They need to have safe investments to protect their income streams, but not so safe that they risk running out of money. And that's because inflation, right? It was the story of the year last year, already this year as well. The consumer price index jumped 7% year over year, which is why your number one point for everybody, Kyle, is watch out for inflation.
Yeah, exactly. And this kind of goes back to a very simple concept, which is why do we invest in markets in the first place?
Mhm.
And the answer to that is simply to participate in economic growth over time, right? And so, really staying invested in a balanced and appropriate way is going to be one of your best defenses against inflation itself.
Mhm.
I mean, if you think about it, if you had moved your whole portfolio to cash in 2020, early
Mhm.
2020, right?
Mhm.
And you didn't participate in any of the run up that we've had along the way. And now you look out and now things cost way more than they did
Right.
before, especially homes and real estate. I mean,
Right.
it puts you almost at a disadvantage by, not participating in a appropriate way.
Right. Yeah. Very good point. And now, point number 2 here is forget the 60-40 rule. That model has been such a long-term strategy, but it recently posted its worst performing month. So, what's going on here?
Yeah, I mean that's a great point, and things are getting trickier. I mean, it's
Mhm.
not all status quo like it used to be, but there's a relative weakness in stocks and bonds to a degree. In case you haven't noticed, the market's having a pretty hard time so far in 2022. But you have to get creative. Okay, that doesn't mean that this is the end of investing by any means, but it just means that we have to employ other tools because the economic landscape is making us play with basically different tools.
Mhm.
So we like things that are kind of more options based right now, buffered ETFs, structured notes, things of that nature to kind of complement the traditional 60-40 portfolio and maybe alter that mix a bit.
Okay. And the third point that you wanted to bring up is consider annuities. And I feel like there's often a love-hate relationship here. What is it that we need to keep in mind?
Yeah, absolutely. I mean, it's a big buzzword. A lot of people don't like them simply because that's kind of how they were portrayed for a long time. And there's definitely good and bad annuities, no doubt.
Mhm.
For the most part, we like using annuities for income. It's very hard to rival the fixed indexed annuities in terms of income versus like a traditional stock bond portfolio. And we don't really care for the variable annuities in our practice.
Mhm.
Not all of them, but there's quite a few of them that are pretty high in fees, and also a lot of them actually are still subject to market risk. And so that's kind of one of the appeals of annuities on the index side is that you don't necessarily have the same kind of market risk that you do in a variable annuity. So it's a
Mhm.
good complement in a retirement plan overall to your portfolio that's invested directly in the market.
Yeah, but you got to do your homework on those, right?
Absolutely.
And number 4 you have is consider real assets for diversification. What is that? What does that mean?
Right. And so I think this point's more poignant today than it's probably been in recent history, right? I mean, if you look at the price on the investing side of, let's say, oil and wheat, I mean, they're going through the roof. It's
Right,
crazy.
right.
And so these are kind of global developments, and there's ways to participate in essentially the growth of the value of a real asset in your portfolio. And that's one of the things that we'll do for some of our clients, if they are more growth oriented and they want to participate in things as they unfold. That's actually one of the areas we kind of pride ourselves on. And also, I mean, if you look at real estate, owning real estate has been a good thing for a very long time. I don't
Mhm.
think there's anything wrong with that as a part
Mhm.
of your overall retirement plan.
Mhm.
So we work with clients on that side of things all the time as well.
That's important. I feel like a lot of these points that you laid out are a little bit advanced, at least worth talking to somebody, certainly somebody who's a fiduciary. Kyle, if somebody would like to speak with you more about these points that you've laid out, what's the best way to reach you?
Absolutely. Best way to reach us is through our website, firstcoastfinancialgroup.com. And you can book an appointment directly online if you wanted to.
That's great. Kyle, thank you.
Thanks so much, Erin.